What is going on, guys? Nick here, back with another video. On Thursday, October 14th, Corsair Gaming fell 8%, continuing a really rough downward trend that they've seen since February of 2021. But even with the continued sell-off, Corsair Gaming has been a really popular stock on Reddit. And since we always want to buy low and sell high, I figured I'd take a look at this stock and figure out if this is potentially a buy low opportunity. So we should probably start with what exactly is Corsair Gaming? Well, they describe themselves as a leading global provider and innovator of high-performance gear for gamers and content creators, and that they design and sell high-performance gaming and streaming peripherals, which is basically a fancy way of saying that they sell gaming accessories. They have a huge fan base with about 2.8 million followers on Instagram and 439,000 YouTube subscribers with 46 million lifetime views. Now, they break their business down into two segments. The first segment is gaming and creator peripherals, accessories, which are basically keyboards, mice, headsets, and capture cards. And the second segment is gaming components and systems, which are basically things like high-performance power units, cooling solutions, and pre-built custom gaming PCs. Now, Corsair has seen a huge increase in its target audience since 2020, growing from 524 million PC gamers in 2019 to an estimated 825 million by 2020. And that rapid increase has seen PC gaming continue to become more mainstream, driving sales of gaming consoles and additional gear. But even with all of this expansion, the stock has performed really poorly, so let's take a look at why. In June alone, the stock fell 12% after the adjusted earnings per share of 36 cents came in short of the consensus analyst estimate of 39 cents. The company said this was a result of higher logistical costs, which they expected to continue to remain elevated. At the time, the CEO, Andy Paul, said management still saw revenue growing by 12 to 24%, between 1.7 to 2.1 billion by the end of 2021. But then by mid-October, Corsair revised these estimates. Paul said that their 2021 revenue had been held back by at least 10% because of global logistics and supply chain issues. The new revenue estimates for the full 2021 year were brought down to 1.8 to 1.9 billion for the full year. And it's these revisions that have caused a lot of pessimism with the stock. Bayard downgraded the stock after the announcement and decreased their price target from $38 to $29. The problem right now is it's almost impossible to get a new GPU because of the global semiconductor shortage. Right now, the shortage is so bad that people are holding off building and upgrading their gaming PCs, and this has reduced the demand for peripherals, accessories, that Corsair sells. So now that we have a good understanding of the business, let's take a look at how it's actually performing. So when we look at their revenue and net income chart, we only have a limited amount of data because they went public in September of 2020, but we can see pretty steady growth. However, we also see very slim profit margins for the company. When we move over to their expenses, the reason for those slim profit margins is 80% of the revenue is going right back into the cost of that revenue. These are the direct costs to produce and distribute their products. Looking at the segment broken down by revenue and profits, we can see that the components and systems are the majority of the revenue, but both of these segments produce a pretty similar amount of profit with about 300 million for each over the last year. On their balance sheet, they reported 1.3 billion in assets to 848 million in liabilities. This leaves them with 529 million in equity. They reported 270 million in debt, putting their debt at only about half of their equity. They also have 134 million in cash, so this is a very good, healthy balance sheet. Okay, so now that we've seen how they're performing, let's take a look at what the business is actually worth. So for the current forecasted revenue and earnings, we see pretty modest growth after the huge jump we saw between 2019 and 2020. The current forecasts expect today's revenue to go from 2 billion and 154 million in net income to 2.3 billion in revenue and 207 million in net income by 2023. If we look at the current growth forecast, analysts see between 7 and 9% over the next couple of years, and that same pattern shows up in their net income growth projections too. So I think a pretty fair forward growth rate estimate for the company is between 7 to 10% going forward. When I put this into my fair PE calculator, it comes out to a fair value between 17 to 22. When we take a look at these earnings multiples and look at the forward earnings estimates, Corsair is pretty undervalued right now. And by 2023, based on the current forecast, the stock should be worth somewhere between 35 to 46. Now, this all depends on Corsair being able to get through the current global chip shortage. And it takes a lot for a chip company to be able to increase their production, and there's currently a huge backlog of demand. Now, when we look at the technicals, things look pretty ugly. It's slid a lot since May and has remained pretty much under the 200-day moving average. On the last trading day before I recorded this video, the stock had a pretty big gap down, breaking below the previous support lines. This came after a pretty solid run-up we had seen since the beginning of the month, and even after hours, the stock has only managed to come up less than 1%. So this doesn't really look like a strong rebound is about to happen. so I don't own any shares of Corsair right now, but I am interested after taking a look. I think the price is a great value right now as long as the analyst forecasts hold up, but we need to keep an eye out for a breakout opportunity. The short-term outlook for the price movement doesn't really look very good, and I don't see any breakout momentum right now, but we're going to have to watch to see how the stock reacts to this big gap down. I think the price is so low right now that we'd actually have to see an increase in the impacts from the chip shortage for the current sell-off to make sense. I can't say for sure when the stock will rebound, but I do think holding the stock over the next couple of years will have pretty good returns for you. So check out whichever video that YouTube is suggesting that you watch next right over here, but don't forget to hit the thumbs up button before you leave, and as always, thanks for watching.